Do you buy the dream or do you buy the discount? It's really the central tension for every investor right now, isn't it? Is a company's value based purely on the story, the innovation, or is it just about the cold, hard numbers? Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into Circle Internet Group, ticker CRCL. And this company is basically a pillar of the stablecoin universe, right? A key digital infrastructure player. But looking at the data, this is as of November 12th, 2025, the stock chart, well, it's showing some serious pressure. So our mission today is pretty simple. Is this digital titan actually on sale, a bargain? Or is gravity finally catching up to what might be a high-flying valuation?
Well, the macro backdrop certainly sets the stage for conflict. It's interesting. This morning you look at pre-market futures and they're signaling risk on. Nasdaq is leading the way, classic sign. But, and this is a big but, that optimism is slamming right into a major headwind. The longest government shutdown in U.S. history.
Right. And that shutdown means basically everyone, the Fed analysts and importantly you, the investor, you're all flying blind. Key economic data just isn't there. So uncertainty is really the name of the game. Damn. Which forces us to lean pretty heavily on fundamental models, doesn't it? So, okay, using our research, based on that free cash flow model, which is, let's be honest, usually pretty conservative. What do the numbers say Circle is actually worth?
Yeah, the difference between the price and the value is pretty stark. Our FCF model puts Circle's fair value roughly around $73 per share, give or take. But the stock, it's trading closer to $98.
Wow. Okay, so that's a $25 gap. Yeah. That difference, that premium, that's basically what you're paying purely for the story, right?
Yep.
A long-term vision of stablecoins, a decentralized infrastructure, all that.
Exactly. You're paying almost 30% extra for the narrative right now.
And what's fascinating, to me anyway, is that Wall Street analysts seem completely torn on whether that premium is justified. I mean, look at the ratings. It's almost split down the middle. 44% say buy, but almost as many, 39%, are just sitting on the fence with a hold.
Yeah, it's a total tug of war. You've got the long-term crypto believers on one side and the short-term, show me the earnings reality checkers on the other.
So if the fundamentals are kind of a draw contested territory, we have to look at sentiment, right? What's the crowd thinking?
And the crowd, well, it's leaning heavily bearish, overwhelmingly so, actually. The options market is flashing warning signs. The put-to-call ratio is way up there at 1.3.
1.3. So for every 10 bullish bets, there are 13 bearish ones hedging downside risk. People are actively buying protection.
That's right. They're hedging against that story falling apart, basically. And it's not just the options market.
You mean the short sellers?
Exactly. The shorts are piling in, too. Short interest is sitting at a pretty hefty 10.33% of the float.
Ooh, 10.33%. That's significant. That kind of level pretty much guarantees volatility if any good news drops, but it also shows real conviction from the bears.
But wait, shouldn't the long-term potential, like the network effects of what Circle is building, eventually win out over these short-term valuation worries? Maybe in the long run, but in the short term. Unfortunately, the technical chart just confirms the sellers are firmly in the driver's seat right now. The trend is down, unambiguously down. The stock's been sliding since, July? When it peaked near $260. And crucially, just recently, it broke below that key support level, that consolidation range between $120 and $150.
It broke that floor. Okay, that's usually a big deal, a signal of a major momentum shift, money flowing out.
Precisely.
Okay, let's recap this. Macro is mixed because of the shutdown. Fundamentals look weak compared to the current price. Sentiment is decidedly negative. Technicals show clear damage.
But hang on, here's where it gets interesting. You mentioned volatility. Some indicators are suggesting it's now deeply oversold. So are you saying that despite all this negativity, the selling pressure might be exhausted, at least for now, maybe setting up for a short-term bounce? That's exactly the countersignal we're seeing. It doesn't guarantee a reversal, not at all, but it suggests the intense selling might pause. You could get a technical bounce from these levels. So if we pull all four factors together, mixed macro, weak fundamentals, negative sentiment, and confirming negative technicals, our overall strategic verdict has to be neutral, but definitely with a strong bearish bias.
Okay, a neutral stance, bearish bias. Makes sense. But what if the bears are wrong? What could challenge that thesis? Maybe a surprise broad market rally or perhaps some unexpectedly dovish talk from the Fed speakers today, what are the key levels we should be watching, the battlegrounds?
Good question. Technically, the key resistance is now that breakdown point around $120. That old support is the new ceiling. If the stock can't reclaim and hold above $120 on a sustained basis, well, the path of least resistance really points down towards that fundamental fair value estimate. So around $73, maybe, with $70 acting as a psychological floor just below it.
Right. So the bottom line seems to be, Circle might be building something essential for the future digital economy. The story could still be valid long-term. But right now, the short-term data suggests the stock's kind of stuck in a technical ditch. And the tow truck, meaning that big institutional money, just hasn't shown up yet.
That sums it up pretty well. The potential is there, but the current price and momentum are working against it.
Okay, fascinating stuff. Lots to think about there. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.